This here is a bet that not many people want to make. What we see here in the background, that's the total value locked, or the capital that's currently on the largest borrowing and lending platform, Aave. And this does not look like a good bet. The momentum is bad, money is flowing out. But a lot of that decline since October of last year is just crypto in general going down. Prices going down. It's not necessarily the platform getting used less. Here is the capital on the protocol measured in Ethereum. Now we do have a big drop over here, but that was a single event. The Kelp DAO hack. The protocol was able to stabilize and now sees inflows again. And at the same time, the fees that get generated on Aave stays stable. And so is this potentially an opportunity? And if yes, how much upside is there really? Here we've got the Aave price in US dollars. Over the years, we tend to trade in a range. The dotted line, that's the average price over the entire history. And if we were to go just back to that equilibrium price, Aave could appreciate by more than 80%. And we already have our first positive news, as in big deposits hitting the Aave protocol. So let's have a look at the data in more detail. Who is the marginal buyer? Who's the marginal seller? Where is the price likely headed from here? Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and I did this mainly through active trading of altcoins. My track record can be seen in the website down below. Over the last 2 years, I started to publish my trades in real time. We are, with the current open positions, at a new all-time high. So we made money while the vast majority of traders in this bear market lost. And all of the positions that are already closed, they are publicly visible over here. I don't think that many people in crypto are willing to be as transparent. Now, I can't share the current open trades. That's, of course, for the premium members. But I do want to share the approaches, the data points that I look at to decide whether or not to buy an altcoin. And one of the most important data points is tokenomics, right? We are buying demand versus supply. When we want the price to appreciate, then of course there needs to be more demand than supply. And tokenomics determines how many new tokens hit the market. How will the supply grow? And what we've got with Aave is a buyback program. Now the protocol is quite complex. We don't just have borrowing and lending. We've also got a stablecoin. We've also got a safety module. Everything is connected to an external price feed, so Chainlink. But there are major players backing Aave, for example, Grayscale. By the way, if you are on X, formerly known as Twitter, then feel free to also check out the account of this channel. I publish data regularly over here. Make sure though that you follow the right account. So that is @BitcoinStrat. That's the only official account. Please do not follow any fake accounts. This is the only one where I personally post. Now, getting into Aave is a truly contrarian bet because historically the token underperformed Bitcoin. This is the Aave price divided by the Bitcoin price. On average per year, if we just connect those channel bottoms, the token underperformed by roughly 27%. This is a logarithmic scale. And the reason for that was tokenomics, as in new tokens hitting the market. However, there has been a DAO governance vote in October of last year. And that changed the tokenomics drastically. Post 2028, Aave will become a deflationary token. Now we still have 2 years of reserve emissions and the buybacks will slightly outweigh those emissions, which means a circulating supply delta of minus 0.6%. So the deflation is real, but not very large in magnitude. But I think this will help Aave's market cap. I think that it will not fall below 1 billion anymore, unless, of course, the crypto space in general drops even further. We can also see how recently the attention on Aave is growing again. And have a look at how price and attention moves in line. This is very typical for crypto. The more attention there is on a token, the higher goes the price. Currently, the attention is high, but the price has not yet adjusted to that accordingly. Now let's have a look at the short-term traders. So the people that use leverage, the people that use perpetual futures to trade Aave. On average, there are more people that bet on rising prices than on falling prices because most of the time the funding rate is positive. This is not typical for crypto. For many altcoins, we see this either negative or at least hovering around the zero line. For Aave, most of the time, the funding rate is positive. People are bullish. Another thing that's not typical for most alts is that the open interest, so the amount of bets on the token and the price itself, is not that highly correlated. Yes, we did have some correlation in the last year, but recently, for example, we got more trading, but a decoupling of the price. People got very scared to invest in Aave after the kelp DAO hack. But that's the whole idea, right? We want to buy the fear. We want to be contrarian. Trading volume on Aave on the perps is also rather low. And again, there is some correlation between the price and trading volume. If trading volume shoots up again because of positive news, then of course the price will follow. Now, as said, I actively trade the market. I don't just buy and hold. I try to time the assets. And that's based on statistical analysis. I try to figure out what kind of trading rules work the best for a particular asset in the past, and then I just apply those trading rules in the future. That's why the performance looks the way it does. And so I've done the same for the Aave protocol. So here we are. I'm trying to find the best trading rule for golden crosses and death crosses. So that's two moving averages. The question is, what's the best moving average combination? And that is answered in this chart. So we've got the slow moving average, we've got the fast moving average, the combination of those two moving averages, and we've got the best ones over here in this area. To be more precise, the best combination is the 12-day simple moving average with the 40-day simple moving average. So whenever the 12-day moving average goes above the 40-day simple moving average, that's a bullish signal. Whenever the 12-day goes below the 40-day, that's a bearish signal. And here's how well that trading strategy worked in the past. So we've got the portfolio value here in blue. Every single year, that strategy made money. Buying and holding Aave, of course, did not. And that's why I like to use those trading rules. They tend to outperform quite consistently. And that's why we make money relatively consistently, while the rest of the market got wrecked. And so let's have a look at what the situation for Aave looks like right now. We got our golden cross on the 27th of June. So not only did the tokenomics improve, we also have a change in the momentum. Again, not every single signal works, but on average, this trading strategy works, right? We did have our bad signals. For example, here, we had a golden cross here and then subsequently a bad death cross over here. There are our bad signals every now and then, but that's why we run the backtest. That's why we try to figure out what historically worked well. And there seems to be a quite convincing signal. We've already come above the 40-day SMA for quite a while. And the price right now is very comparable to the price that we got when the golden cross hit. So we aren't necessarily even late to buy right now. Now, unfortunately, I cannot share every single position that's currently open, right? That's for the premium members. However, there is this website in the pinned comments down below. You can get one free premium trade, either via Telegram or via email sent to you. For Telegram, just click on the button or scan this QR code. That's a trade that I personally hold. It's also a trade that many premium members currently have open. I believe it will continue to make money. Besides the trade, you will also get a tutorial video on how to set up that trade, how to manage risk, etc. So again, that's pinned down below. Feel free to make your first money with it. And once you do, you can still afterwards decide to reinvest that in the paid membership. But first, feel free to set up your first moneymaker, learn how we do all of this, and then we can take it from there. If you don't have time for manual copy trading, there's also an automatic copy trading vault that's currently at 21% annualized. Last year, we got 44. All of the copy trading pools are currently in profit relative to buying and holding the underlying asset. So that's available as well down the road. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.